Hey, good morning. This is Julie, and I am looking at the market for crude oil coming for Monday, August 17th. Two things that we should be aware of. CNBC on Friday afternoon reported something very, very unique, that there are a ton of September option contracts in crude that are going to expire Monday at settlement. And 23,000 of those have September 40 strike puts, meaning that if there is one tick below $40 at 2:30 p.m., the holders of those options will make $2.3 million collectively. So that is a huge, huge, huge event risk. And they're saying, I mean, for CNBC to be reporting this, that they don't ever remember seeing anything like this. It's a major, major event. So they're thinking price is either going to crush or rise. So we're going to see some volatility Monday because of the options that are expiring. A lot of people will probably trade this as a short squeeze on those options, and a lot of people are going to be saying, let's give it to them and writing this down. So we'll know that Monday is going to be an interesting day to trade crude. Another event that came out that was reported Friday afternoon on the Wall Street Journal, and Obama allowed oil companies to swap WTI for heavy Mexican crude. So I don't know why they want to swap. I guess products are made with the heavier oil blend, but it's creating a chink in the armor of that 40-year ban on selling crude overseas. So we're going to allow, let's see how much they can, I think let me go down here, how much, 100,000 barrels a day, so that they can bring that in, swapping at 100,000 barrels. So that's going to get rid of some supply out of Cushing. So we could see a pop in crude off of this news, and that would put the short squeeze on these options. So these option people were probably dumping their contracts or will dump their contracts at the open Monday. So if we see an open drive Monday, go with it. I mean, just go with it, because those will be the option people getting out of their trade on this Obama news of this Mexico oil swap stuff. So how do we trade that? Looking at the chart, we've been in a 6 out of 30-day downtrend, 6 up days, 30-day downtrend. Just amazing. I mean, 80% down days in the last month and a half, 2 months. Just insane. What this looks like on the 240-minute chart is our falling wedge. If I come back up here, I wanted to show you what the falling wedge looks like. Right here, it's a reversal. I'm going to be looking for volume popping me up out of this wedge, and I will be watching for this volume leading into tomorrow, Monday morning. I don't know if those option people are going to be able to get this down to 40. This event here was the China devaluation that hit all the markets, the E-mini, crude. This put a pin bar on the charts, though, because of that event. So it is an artificial um, pop, low and pop. So I don't know if that'll get filled. It was a 1 second move. I can't imagine anybody getting a stop parked down there. So I'm sure some people have piled on some stops below that already, expecting to push up. So who's to say that we won't make a run for this 40 on Monday? If it goes that way, go with the trade. But I'm sort of looking for a short squeeze myself, given that we're at the bottom of this falling wedge, and that is a reversal pattern. It's not a continuation pattern. So if I see some Monday morning drive coming into the market, I am going to trade that up. And how do I trade that? How do I take the trades for that? Normally on a range day, a normal day like Friday was a normal range day, I put my KXD up, and I can either use my range signals to trade the top of the channel back in to the bottom and the bottom of the channel back up to the top and then back down, or I'll just put my KXD on there, which gives me the same sort of price action. But on a trending day for an entry signal, there's nothing really better to get in a market on a trending day than these trending signals. So that's one way to re-enter. Or I may just want to put my direction guide template on and just take long signals, which I can do. Pull this up. There we go. I can get other just long signals to get me in a position. So when I'm expecting a trend and I want to come back into the market in the direction of that trend, I can use this filter. So whatever filter that you want for your entries, it all boils down to what kind of trading day you're having. You can make sure you're trading in the direction of the open to close on your higher time frame trend, and your open to close for your day trading principle, but also you just need to be watching that day type. If it is a normal, typical day type, you just want to be trading, sorry, here we go. You just want to be trading, selling the top and buying the bottom, finding your high and low of the day, and then hitting that mark if the market comes back, to hit it using your initial balance and your other value areas to trade off of, support, resistance. And most of the time, that's how the market trades. But if we get a pop on Monday on an opening drive where it just keeps going the entire time after the open, and it just like this, and it just keeps going. Here's an opening drive. This is what it looks like, where it just keeps going, 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 going. Come in and get your high lows to get you in the trade, and it just keeps you in it, keeps you going. You can also just use a shorter time frame inflection. Anything just to get you here, long bar direction. Just put yourself in the position to make money out of it. The key is to recognize the day type. and develop filters with Bloodhound. There's many different ways to slice data to keep you getting back in the direction. Don't get yourself knocked out. Park your stop below these pivots. As you see on a trend day, they don't get violated. If they do, they're coming back to the moving average on a pullback, and you can get back in if you do get knocked out. Of course, there's going to be pullbacks. This is the value area high, this blue jagged line. If I put the VWAP on it so that you can see that, you'll see on a trend day, price will bounce off the VWAP band and pull back to the value area high or the 8 EMA and then keep going. So use your bands, the value areas, your VWAPs, turnarounds. Anytime you see a turnaround on a VWAP band, go with it. And hold it. I mean, trail it. Trail it, trail it, trail it. Just keep going. Even though a pullback comes, if you want to get out here and get back in, that's fine, but you never know when it's going to get back in. And some of these can shake you out up and down. These are like 30 tick moves. So it's best to wait for a reversal, an inflection. But Monday will give us some good opportunities in the market, I would imagine. So hopefully we'll be prepared for an opening drive day. If we do see the market tanking, selling off, be very, very cautious. The market may just be flushing stops, coming down to a previous value low. And if that does reverse back up, that would also be an excellent place to buy along. I'm just feeling, I don't feel like those options are going to get a 40 push tomorrow, given that news that there's going to be 100,000 barrels of crude oil that is going to get swapped to Mexico. That's going to reduce the supply. So that's going to be bullish for crude, my guess. But who knows? We'll just have to trade tomorrow as it comes. Thank you.